Hello everyone, Mike Arnold here, co-founder of Path Trading Partners on Bob Iacino. So if you're new here, please subscribe, please ring the bell, please do all this stuff to help support the channel, so we can keep the videos coming and we can do some user requests. This one is from Gerald. We're going to do two for him today. FSLY, do not trade this, just put up the technical analysis, and treating it like a stock. I don't watch this one, so I don't know much about it. But generally, when I get a new stock, I start with the weekly to put it in perspective. So, I'll zoom out where you can see it hasn't been trading that long. It's been trading for just over a year. It's ramped up very, very strongly, and it's above the weekly rotation zone by a fair amount. I don't have a lot of history to judge it off of yet, but I'd really watch last week's low. Last week's low coming in 73.87 with the rising rotation zone on the weekly basis. That's key support. If it does dip into there, then we're going to start watching for the bigger pullback. But that's the key level to watch for support, not only with the candle from last week, but that weekly rotation zone. Looking at the daily, here's the daily. We have a significant level, 78.15. So I'd start to really, if we get below 78.15, especially on a closing basis, going to start watching for that bigger pullback. The areas on the daily, because that would be below the rotation zone on the daily. And I'd start watching for the 37.5% retracement coupled with the 50-day exponential moving average. So right now it's sort of a wide window. I'd fine tune it. One of the things I can also do is come up here and put on the, let me put on the GAN levels. Okay, so this gives us a really good idea. So if we start breaking below that significant level, which puts us below the daily rotation zone, that's 73.87, which was last week's key low that I talked about. If we break below there, 70.24, and then right around 66.60 with the rising rotation zone. So that's your key area right around here if it starts to break down. Just check that on, hold on one second. Let me make that visible on the weekly basis. Now we can go back and see. So you can see how that plays in the weekly. That would just start dipping into the weekly rotation zone and wouldn't even get to the week's lows from 4 weeks ago. So within the last month, it wouldn't even retrace that amount of price action. So those are very easy targets. Let's take a look at that 4 hour. So you got the first cross of rotation zone. So the 4 hour is now bearish. Okay, we did get back above it today, but we closed inside it. So that was a lot of weakness coming in. There was actually a lot of selling pressure in today. You can see also this little candle base right below the significant level at 71.21 is where the 50 period exponential is. So you can keep an eye on that on a 4 hour basis. If we get a 4 hour close below that, then it'll start separating the rotation zone on the 4 hour. So we'll be in full sell mode on the full hour, on the 4 hour, and then we will start watching for those daily targets. Now, if we do rotate back up and strength comes back in, 87.66, 89.37 in major cluster right at around 91.07 to 91.41. So those are your key levels right there. That'd be the 12.5% retracement and the 25% GAN extension from this low. Above there, on a continued rally, the things that jump out of me, this little shelf, let me mark it off for you. This candle body shelf, see right there, that's the next target I used, 96.26. Besides using continued GAN extensions, I'd be watching for this 96.26 area. Then there is still a gap here. So if you started trading into back up near the recent highs, the full gap fill would be to this open at 101.06. So that's just an overview. Right now there's no, 4 hour is in sell mode. Daily is still in bullish, but flattening out, so it's getting tired. And you can start seeing here we did have a daily sell divergence. So back last week we had higher high on the daily. lower high in the RSI, confirmed with the trade below this bar that formed the peak. So that was the sell confirmation on the divergence. And when you get that, I start watching for the pullback to bottom of the rotation zone, which it did. Tried to rotate back up and has so far failed. So this is definitely running out of steam. I treat it in cautious mode and know where your stops are, and only get aggressive if we start breaking back up with a nice strong rotation back up, especially getting above this 91.41. That's what we have for you on FASTLY, FSLY, and we'll talk to everyone later. Bye for now.